Hello everyone. Today we will talk about perpetual inventory system, FIFO, LIFO, and average cost. First of all, we have two inventory systems, perpetual and periodic. Uh, the main difference is that on periodic inventory system, we have our cost of goods sold only at the end of our period, a month, a year, you choose it. And on perpetual inventory system, we have of cost of goods sold after each sale we have. So it's more accurate one. And periodic inventory system, we will have a video about that soon, probably on first week of August to 2016. And we have three ways of doing perpetual inventory system: FIFO, LIFO, and average cost. FIFO means first in, first out. The first purchase is the first purchase we have will be the first goods that we will take off our inventory. LIFO, last in, first out. Last purchase will go out first. And average cost, we work with the average purchase we have. So it will be much easier if we work with an Excel spreadsheet. So we have an example of beginning inventory, not 60, sorry. Well, 50 units. Let's stand here as well. Average is right. And we have two purchase, 100 units, the first one, 120, the second one, and two sales, 110 on our first sale, 140 on our second sale. But our sequence is one purchase, then one sale, second purchase, second sale. In LIFO, the same thing. Whoa, average. Oops, 110, 140. Let's erase here. And okay, so let's go back. FIFO system. We separate by colors. It will be much easier to see it at the end. So the first purchase, 100 units. So on our inventory, the beginning inventory and our first purchase. And we separate both because it will be easier to work with them on our cost of goods, because on our first sale, 110, FIFO, first in, first out. So the first out will be this one that is the first purchase. But we do not have 110 here. So we have 50, $12, $600. And 110 minus 50, 60 units on our last purchase. $15 each, $900. And our inventory. On the first purchase, we do not have anything else, only 40 units on our second purchase. So 40 units, $15 each, $600. Second purchase, the same as the first one. Our beginning inventory plus our second purchase. And our second sale, 140, but we do not have 140 on our first purchase. So 40, $15 each, $600. Then 140 minus 40, 100, $18 each, $1,800. And our total inventory, 20 units at $18 each, $360. And LIFO. LIFO is quite the opposite. So on our first purchase, the same as FIFO, because we do not have any goods sold yet. But our first sale, 110. We do not have 110 on our last purchase. So we will take out 100, $15, and 10 units on our first purchase. That is the last one to take out on our inventory. So our inventory, 40 units, $12 each, $480. Our second purchase, the same as the first one, beginning inventory plus the second purchase. And our second sale, we do not have 140 on our last purchase. So 120, that's our second purchase, $18 each. And 20 units remain on our first purchase, $12. So our total cost of our inventory, 20 units, $12 each, $240. And what about the average? The average is the easiest one. We do not have to take care about the first purchase, about the last purchase. We only work with average. So how can we do this? First purchase, 100. So on our total cost inventory, beginning inventory plus first purchase. In dollars, beginning inventory plus first purchase. And our average price will be amount of money divided by amount of units. In this case, at 2,100 divided by 150, $14. Sale 110, we have 150 on our inventory. So 110, we take out with our average price, $14 total, 110 times 14, 1,540 units. Beginning inventory minus units sold, 40. Beginning inventory minus amount of dollars sold, 550. Average price, money divided by units, the same, 40, because our takeout was with the same price as well. Second purchase, beginning inventory plus purchase, beginning inventory plus purchase. Average price, money divided by units, $17. Sale, 140. Average price, 17. Total, 140 times 17, $2,380. Units on our inventory, 150 minus 140, 20. Money, 2,720 minus 200, 2,380. And average price, 340 divided by 20, 17 again. So we can check that our units will always be the same on average 20, LIFO 20, FIFO 20. Because it's units, we will have the same amount of units on our inventory. And our income statement, just erase it. Sales, 110 plus 140 times 30, $7,500. Cost of goods sold is the sum of our cost of goods sold. LIFO or FIFO, 3,900. LIFO, 4,020. Average cost, 2,920. And our gross profit, 11,520 on LIFO, the biggest one. Check here, one. $11,420 on average cost, number two, and 11,400 on FIFO, the lowest one. And our inventory, FIFO 360, LIFO 240, and average cost 340. And is that correct? Is that a way to see if the numbers are correct or not? Yes. The sum of cost average, cost of goods sold plus inventory will always be the same on our three methods. So in this case, it's the same value, so it's correct because the amount of that will always be the same because if our cost of goods sold is lower, our inventory will be higher and the sum will be always the same because we work with cost numbers or purchase numbers, so it will always be the same. And what about this behavior of gross profit? Gross profit will always LIFO will be the highest one and FIFO will always be the lowest one? No. This happens only because our price is getting higher. Our beginning inventory 12, then higher price on our first purchase, higher price on our second purchase. So when we have growing prices, the behavior will be this one. But let's change a little. Let's change our prices. $25 here and 20 here, 18 here. Our prices are not growing, they are decreasing. So let's change on LIFO to 25 and 20 and average cost 25 and 20. So let's check our income statement. Whoa, FIFO now is the biggest one. Then average cost, the second one, and LIFO, the third one. So normally our average cost will be in the middle. And when our prices are decreasing, FIFO will have the greatest gross profit and LIFO will have the lowest gross profit. So that depends on our behavior of the purchase pricing. So that's it. If you have any questions and suggestions, just email me on jscarpin@gmail.com or add me on Facebook by my full name. And we have a Facebook group that's the same name of our YouTube channel. You can subscribe it anytime you want. And the Facebook group is called Accounting 24/7. Okay, that's it for now. See you soon.